Hello, and you're welcome to Global Business Insights, where we look at headlines from a deeper business perspective. Volkswagen management will face a tense and fearful workforce today at a meeting in its headquarters as it proposes drastic cuts, including factory closures in Germany for the first time ever, even as it seeks to achieve its profit target. The latest data published by Caixin today showed China's Services Purchasing Managers Index down from 52.1 in July to 51.6 in August, also missing estimates of 52.2. The Japanese yen edged higher as Japan's service sector activity stayed in expansion in August, with Services Purchasing Managers Index PMI unchanged at 53.7 last month. Service companies' new business growth, however, slowed from the previous month. The Euro UK pound rate lost some of its intraday gains after release of the Hamburg Commercial Bank, that's HCOB Purchasing Managers Index data from the Eurozone and Germany. The Eurozone Services PMI was lower at 52.9 in August from 53.3 in the previous month. The composite PMI fell to 51.0, missing expectations, and also below 51.2 in July. In Germany, the HCOB Services PMI was also down to 51.2 in August, slightly below market expectations and the previous month's reading. In the United Kingdom, it was good news as the services sector recovery gained momentum. The headline S&P Global UK Services PMI, the index was up at 53.7 in August from 52.5 in July, also the highest reading since April. It was, however, noted that although showing a solid upturn in service sector output, the latest reading was still slightly below the long-run survey average, which is 54.4. Improved activity was due to an improving economic backdrop and an associated rise in willingness to spend, including the prospect of falling borrowing costs, supporting business and consumer sentiment. For US stocks, the jitters returned. Nvidia shares fell 9.5% and wiped off $279 billion in market value, also the largest ever one-day loss for a single company. Will investors be buying the dips when markets fully open? We'll have to wait and see. The Institute for Supply Management's manufacturing PMI for August, that's in the US, was at 47.2, better than July, worse than forecast, but still the fifth straight month in contraction territory. Commodities like oil and copper were also selling off. Brent crude down 4.9% at $73.75 a barrel. That was at close, about close of day yesterday, the lowest level we've seen since December. On data today, we do get the Bureau of Labor Statistics job openings and labor turnover survey for the end of July. On Friday, the next big test could be US jobs report, and analysts are expecting a gain of 160,000 non-farm payrolls versus 114,000 added in July. Unemployment rate is expected to tick down slightly to 4.2%. Japan's biggest steelmaker, Nippon Steel, seeking to acquire US Steel today, said if its purchase goes ahead, the core senior management as well as majority of board members at US Steel would still be US citizens. Democratic presidential candidate Kamala Harris came out against a Nippon takeover of US Steel at a campaign stop in Pittsburgh on Monday. Her views mirror those of President Joe Biden's and former President Donald Trump's, but Harris will also propose a tax reduction of up to $50,000 for new small businesses today, a tenfold increase over existing relief and further evidence of her support for middle-class America. UK regulators are scaling back on a previous practice that would have forced banks and payment companies to reimburse fraud victims up to £415,000 after strong pressure from ministers and fintech firms. The new maximum fraud payout is now expected to be set at just £85,000. This comes as regulators fear the higher level could have seen criminals exploiting the compensation system and hurting smaller fintech firms, taking them out of business. In Nigeria, Dangote is taking a victory lap, ready to soon begin deliveries of PMS from his refinery. It is being reported that at the 2024 summit of the Forum on China-Africa Cooperation in Beijing, Nigeria and China have signed a comprehensive agreement to enhance collaboration in the Belt and Road Initiative, human resource development, and nuclear energy. The opposition on the U.S. Steel takeover from Harris, Biden, and Trump is more likely about getting the union vote. The United Steelworkers were opposed to the Nippon deal from the start, worried if Nippon will honor the basic labor agreement between the union and U.S. Steel, despite assurance from the Japanese steelmaker that it will. Analysts say Pennsylvania's 19 electoral college votes could determine the 2024 presidential election. U.S. Steel stock has been down about 22% year-to-date, mostly following disappointment about the deal. U.S. Steel stock also dropped far below Nippon's proposed $55 a share bid for the company because the politics made the deal unlikely. A better candidate like Nippon could not have emerged. Japan is an ally. Nippon is far larger, better capitalized steel maker with leading technology. Nippon also promised an extra $2.7 billion in local investments to try to sway politicians and the Steelworkers Union. Still on politics, after the policy to attack price gouging that came up, we've seen maybe better proposals coming from the Democrats in wanting to help small businesses. This time, a tax deduction of up to $50,000 for new small businesses. Kamala Harris will also announce a goal of 25 million small business applications during her first term, exceeding the 19 million new small business applications under Biden. Trump economic advisors previously argued that Harris's proposal would boost inflation and damage the economy. A closely watched and critical debate on the 10th of September is expected to focus in part on the economy. I would advise Nippon to pause and perhaps try again next year when politics will be abating somewhat, and politicians will be reviewing the campaign decisions for which will fly and which maybe should be reviewed simply because they don't make sense. That is after the votes are in the bag. In the UK, scammers may now expect weaker efforts by banks and payment companies to protect them from frauds as the new regime proposes a much lower reimbursement for victims. Treasury insiders had called the planned new regime, which comes into effect early October, a disaster waiting to happen, but consumer advocates insisted it would still offer vital protection for scam victims. After a consultation on the new limit, an announcement is set to be made soon. In 2023, Britons lost £459.7 million to authorized push payment (APP) fraud, where someone is tricked into sending money from their bank account to a fraudster. Banks and payments companies currently reimburse on a voluntary basis customers for fraud at widely varying rates, with some refunding almost 100% of cases and others less than 10%. The industry also argued that the 415,000 compensation limit was far too high and could encourage fraudsters to set up fake online deals with an accomplice, claiming maximum compensation from the payment provider and sharing the proceeds. Others say the slashing of the reimbursement limit risks exposing victims of the highest value scams to devastating financial and emotional harm, and may reduce crucial financial incentives for payments firms to put in place effective fraud security measures, making it more likely that scammers will continue to thrive on some payment platforms. The payment system regulator observes that there was a wide divergence between UK banks in the actual amount of payments fraud they were refunding to consumers. Others fear that a reduced per claim cap would still leave financial services firms exposed to unlimited liabilities for multiple frauds. Still, taking the cap from £415,000 to £85,000 could have been staged to better monitor the effect on incidents of payment fraud. Nigeria has been looking at having its own nuclear energy industry for more than a decade or so, and during the visit of President Tinubu to China, it was reported that he has secured a commitment from the tech giant Huawei to establish a joint solar PV test lab in Nigeria, and another company pledging to build an assembly plant for electric tricycles and train Nigerians in technology and renewable energy development. But of greater interest is part of the agreements focused on helping to fast track a nuclear industry in Nigeria. This agreement comes as China plans to embark on a record-breaking nuclear expansion that will see it build more nuclear power plants than any other country in the world, in what will make it the world's biggest nuclear generator by 2030. For Nigeria, the partnership offers a promising avenue for advancing its own energy infrastructure and sustainable development goals. The devil tends to be in the details and in what actually gets executed, but China looks set to become a much more influential partner in the Nigeria economic development narrative, and indeed in Africa, at a time when the West is warning of predatory investments that do not help poorer countries, slamming huge tariffs to protect against dumping, and implications of aligning with a country which seems to be more anti-US than ever before in its priorities and friends. Oil prices are lower, and that could ease inflation, prompting more central banks to cut interest rates with more zeal. Oil prices fell to 8-month lows as we see a potential end to a dispute in Libya that has disrupted output and worries about OPEC Plus potentially increasing output later, plus less anxiety on supply disruptions from the simmering geopolitics, all weighing on sentiment. OPEC Plus had scheduled to gradually begin to ease ongoing oil production cuts in October. The market is rife with speculation about the group's output policy, and the latest hints from OPEC Plus sources that the unwinding would begin as scheduled is dragging down crude prices. Indeed, it's also possible that weaker than expected demand, which even OPEC acknowledged in its latest monthly report in August, may imply a delay in easing cuts. But lower oil prices could help demand, and lower interest rates may drive a stronger economic growth, which needs more energy. Lower oil prices also slows drilling activity and investments. Will OPEC Plus producers take a revenue cut from depressed prices in the short term to guarantee higher demand for their product in the medium term? We have to wait and see. Prices could be also much lower in the short term, especially if OPEC were to strategically discourage US shale growth more forcefully, or if a recession were to reduce oil demand. The prospect of a Trump government hoping to crash prices further may also lead to action to protect market share, raising its production despite the downward slide in prices, which will push out costly US shale growth. But the geopolitical risk has not quite faded, and we can expect a lot of volatility in coming months. Asian stocks plunged, tracking sentiment in the US led by Japan's Nikkei 225, with semiconductor stocks dragging down the indexes after Nvidia's sell-off on Wall Street yesterday. Plus, weak US economic data also possibly reviving recession fears. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Thanks for sharing and following or subscribing on Facebook, LinkedIn, or YouTube and X. Again, thank you so very much for watching. Bye-bye.